This video is brought to you by Brazil Resources, trading on the TSX Venture Exchange under the symbol BRI, and on the OTCQX International Market under BRIZF. Brazil Resources just announced an agreement to acquire 100% of the Cachoeira project from Luna Gold Corp. The deal terms imply BRI is paying $18 an ounce for gold in an emerging gold district in northern Brazil, located near BRI's other 3 gold projects. The company is 35% institutionally owned, with 16% of outstanding shares held by the KCR fund, controlled by Doug Casey, Rick Rule, and Marin Katusa. The geological team has earlier discovered more than 10 million ounces of gold directly in Brazil, and is led by successful mining CEO Amir Adnani. To learn more about Brazil Resources, visit BrazilResources.com or call 855-630-1001. Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with Gregory Mannarino. He is a former Wall Street insider who worked for the securities and trading arm of Bear Stearns and author of 7 books, most recently, The Politics of Money. Gregory, thank you so much for being with us today.
Thank you for having me. I really appreciate it.
Gregory, you're a first-time guest, so let's take a moment and just get your overall assessment of our economy right now in 2013, just kind of an introduction on what you're thinking of for people who are just hearing your name and just listening to you for the first time.
Sure. Well, you know, it's kind of complicated, but I really think it comes down to this. We have almost like a grand illusion in many ways that's being set up here to foster the idea that the United States is thriving or coming out of a devastating financial crisis. And in my opinion, nothing could be further from the truth. I believe that this scheme here that's being front-run by the Federal Reserve is doing nothing but creating distortions across the board in the market, which is going to hurt many people when this reverses. And in my opinion, this is simply a continuation of the scheme that is being set up by the institutional investors, by the Federal Reserve, and it comes down to this: a transfer of wealth on an epic scale. And as we move forward here, I do sincerely believe we are going to back in time to a 2-tier society where we're going to have the haves and the have-nots. The middle class will not exist in the future.
Is this in the West, or are you saying on a global level?
Well, I would definitely say that the Western nations, I do see the rise of China. This is something they've had in play for a very, very long time. They want the world's reserve currency. They're going to get it. In my opinion, they've been doing everything right while we're watching the Western world, quote unquote, literally make mistake after mistake. But it really, you have to look at this thing on another perspective. Is it really mistake after mistake, or is this a deliberate attack against the people? In my opinion, this is a war being waged against the people who are just not aware of the direness of the situation, the fact that we're witnessing the death of what I would describe, and many would describe as the debt-based economic model focused around a fiat monetary system. And that is a major distraction, I think, in many ways, that you have to understand, your readers need to understand, that is being set up on purpose. I mean, the writing has been on the wall for quite a while. The powers that be do not want people to understand that the system, the financial system, is crumbling. The acquisition of debt is maxed out. The credit card is done. Meanwhile, they keep fueling this with bailout after bailout and more debt. It's just fueling the bubble in debt, and now, and obviously, a bubble in equities.
Now, Gregory, for everybody who's in power, the system works out great. If you're in China or in an elitist in the U.S. or wherever, the systems works out rather quite well for you right now. Why would they purposely want to change it? Because right now they've got all these masses just sucked up to their iPhones and the television and the radio. I mean, they're just kind of, no one's really making any waves to force their hand to make it end. Is there?
No. I think that, again, and you're right, this is what is going on here. Again, the Federal Reserve is been front running the markets. We understand that, reinflating the bubble in equities, and people are enjoying the ride, and that's fine. But it's a setup. It's artificial. The Federal Reserve has caused distortions across the board in the equity markets, in the debt markets, in the currency markets, in the metals markets, and at one point, the free market will dictate fair market value for everything across the board, and it's going to be like a snapback, in my opinion. But again, this is being set up with purpose, and there's no doubt about it. Those up on the top, those on the top of the food chain, if you want to talk about the elite, they're going to make out like bandits, because this is a transfer of wealth. That's all this is. They're trying to get people hyped up into what's going on now. Again, the suppression of interest rates is allowing institutional investors to speculate with cash in the markets for no risk, because we know the Fed is going to backstop anything. Any type of a deep market correction is not going to happen. They want to hyperinflate the bubble in equities, hyperinflate the bubble in debt, because when those bubbles burst, the mass that's in those bubbles will have an absolute reverse effect, and those same individuals who are long, let's say, equities or long debt are going to go short. And then they're going to collect all of that cash on the opposite side of that trade. They did the same thing, and people don't realize this. During the crash of 2008, these same institutions that were riding that bubble up were the same ones that shorted it on the opposite end, and trillions of dollars were stolen from the American people in that manner, and people of the world. And that same thing is going to happen now, although this time is going to be much, much worse, because it's going to be a crisis of currency, and the Fed will not be able to do anything.
Now, with the currency crisis, because, I mean, I've looked at this so many ways, and it really, to me, it could go either way. And I know you're probably very certain on which way it's going to go, so I want to ask you about that. I question the idea that stocks crash in a currency crisis, because if the currency is the measuring stick, I would think all assets would just go through the roof. I would think the Dow would be at 150,000 and gold would be at 40,000. You know what I mean? So wouldn't stocks and real estate and everything just go through the roof? I mean, if you're measuring it against something worthless.
Well, this is we have to put into the perspective that I think this is how I view it. The dollar is a unit of debt. It's part of the debt, and the debt as a whole is in the biggest bubble that has ever been created in the history of mankind, and that bubble is going to burst, and that's where the Fed will not be able to step in. And what are they going to do? Print more money in a currency crisis? As the debt bubble as a whole bursts, we're going to see interest rates rise, and probably rise very, very quickly. And again, what is the Fed going to do? Print more money? They won't be able to stop it. It's like a freight train coming at you that's an unstoppable force. And as that money, cash, and the debt bubble bursts, that is going to put a huge amount of money on equities. And equities will sell off because of the rising interest rates. There'll be less speculation in the market. And all of that cash there is going to look for a place to go, and that place is going to be in hard assets, and that's commodities. As you know, I'm a major gold and silver advocate. I've been buying for many years, and I continue to do that. I know the spot price. I don't care what they do to it. There's no price discovery regarding paper markets of gold and silver, and I think that's another thing people need to understand too. But that's a scenario I see unfolding, is the interest rates rising rapidly, putting huge amounts of pressure on equities, which will sell off, and the metals are going to go to the moon. And so is crude oil and other hard assets as well, because that's going to be the last safe haven. And we're going to see a mania in these kinds of things that people are not going to believe.
Does it extend into the companies that mine and produce the commodities?
I believe that, yes. I think that they will. I think some of those first of all, I mean, a lot of these are so suppressed right now, with what's going on here in the paper markets regarding gold and silver. I think miners are going to do incredibly well as we move forward. Financials will be devastated. Many things are going to be absolutely devastated. And I talk about this in my book, The Politics of Money. When this whole thing plays out, and there is a new, because I believe this sincerely, there is a new monetary system that's already in the works. Our policymakers are not stupid. They get it. They know where this is going. This is not sustainable in any way. And the new system is going to present incredible opportunities for people to to purchase assets or companies, whatever, for ridiculously suppressed prices. This whole thing is going to reverse. What we're seeing now is going to actually completely make a 180, and then people who are in the metals are going to be able to have acquired so much wealth from having the foresight to be in these hard assets in whatever currency and whatever monetary system we're in at that time. And those are the people that are going to win here. Those are the ones that are going to win, and most people, by and large, are going to lose. But it gets much worse than that. And this is my greatest fear. What people do not realize, I think, and they say, so it's a financial thing, and it's really not going to affect me other than my money or whatever. But that's not really true. There's a direct correlation here between the debt bubble and the population bubble. And this is something I've been screaming about for a very, very long time. When the debt bubble bursts, there's going to be a correction in population on a worldwide scale. They've risen together. We've borrowed monies from the future to live a better now. And that bill is becoming due. And when the debt bubble bursts, that's going to make resources scarce for many, many people, for millions of people. And I hate to put it this way, but I think millions of people on a global level are going to lose their lives because of the resources will not be available to them.
Are you talking about starvation?
I'm talking about starvation, which is going to lead to mass social unrest. There's going to be wars. I mean, we're going to have increasing social unrest here, regional wars, which are going to lead to global wars. That's really where this whole thing is going at one point. This whole thing is, it's like a cancer that's affecting the world right now, and it's going to start. It's already started, and it's going to get much, much worse as we go forward. We're already seeing cracks in the debt bubble. We understand. All we hear about, even from the mainstream media, is how the debt is not sustainable and all kinds of things. And people, I think, and I hope through shows like yours here, are starting to become aware of how dire this is. We've never seen anything like this. I think people need to understand that. And because of that, there's so many variables. But in the end, we know this cannot be sustained.
It can't be sustained. And I often, I've learned this from Rick Rule, that you sometimes confuse, and I'm not saying you, but I'm saying, referring to myself or people in general, confuse inevitability with imminent. So how long can this go, in your opinion? I mean, my own thoughts, in 2008, I would have said it's imminent. Today I go, well, China seems to be okay with the dollar being the world reserve currency right now because it works for them. In the future, it might not work for them, and I agree with you. If ultimately, they will probably have the world reserve currency, but right now, the system works for the people who are in power. So, how long can they keep kicking this can?
Well, that's a great question here, but it's hard. It's really hard to say. It'll work until it doesn't work. I have to say, and then where this whole thing is going to start to unfold, and I think people are being more or less distracted from, is they need to keep their eye on the bond market. That's where this whole thing is going to come apart. When right now we're seeing, we understand that interest rates are suppressed to the point of ridiculousness here by the Federal Reserve, and investors and countries that are holding this debt are actually losing money or losing cash by holding them. Think about it this way, and you can see what's going on here with the 10-year yield here in the United States. We continue to see it drop, and the interest that's being paid, let's say, on the 10-year is less than the projected rate of inflation. So it's a major fear trade, and that fear is this: the investors are willing to take a loss on their investment because they understand they're being paid interest less than the actual rate of inflation. That's a lot of fear. So as that fear gets worse and worse, at one point, it's going to burst that bubble. And it could be tomorrow, it could be next week, it could be next year. And that's the game changer. That is the game changer of them all. Because again, those monies can never be paid back. We've borrowed it from the future, and that bill is becoming due. And what's the Fed going to do? Print it all? They'll devalue the currency to zero. And again, it comes down to the resources. They will not be available. People are going to riot in the streets. They're going to be cleaned out. Just like what's going on here in Cyprus, some of the accounts are taking a 60% haircut. That's insane. This is setting a precedent that's going to, in my opinion, get worse and worse throughout the Eurozone, and there's no doubt that same thing can happen here and probably will in the United States.
Now, how long do you expect this transition to be where it's really ugly for people?
I think it's going to be once we act. We are extremely close to what I would call it a critical mass. In other words, a point where this whole thing is going to reverse. And when it does, it's going to be rapid. People are like, it's going to be kind of a slow burn. No. There's no way. Because we've seen this many, many times. When bubbles burst, and you can go back to the stock market crash in 1929, the dot-com bubble, the housing bubble, the crash 2008, these crash rapidly. So why would this be an exception? This is going to be much, much worse because the fear involved in this is going to be so much greater because there's so much more mass in the debt bubble. It's going to be extremely rapid, and I would imagine that when we get to that point, within probably weeks, we are going to witness events that people aren't going to believe. Again, a mass social unrest, and the stores cleaned out. An inability to acquire basic needs to live. It's going to be very scary. And I think people need to start thinking along these lines and how they can protect themselves now.
What are your first steps as far as people protecting themselves? You've mentioned gold and silver, some mining stocks or commodity type stocks. Is there anything else you think people should do?
Sure. I think people need to have a means. This may sound a little extreme, but I think people are going to need means to, one, defend themselves. Two, you have to think about the first order of business, and what is that? That is survival. This transition period is going to be very difficult for people, and I think they need to, have, food stored enough at least for 6 months, access to water, shelter. These are paramount things, and then secondarily, try to protect whatever wealth you have, and get yourself outside of the banking system. Get yourself out of fiat currency. Period. Get yourself into hard assets. That's the second part of this whole thing, but the first is always survival.
In the short term, as far as the markets right now, do you have any advice for people who want to be involved in the markets right now?
Sure. I would advise people to take advantage of my free website. I have a free website. It's called traderschoice.net. There's no passwords. I'm not going to ask you your email address, nothing. I post on that site every day, equities, ETFs, and stocks. I have 2 lists there, a long list and a short list. I do all the work for you. And you can take advantage of that. I hope people do. Many, many people have already. And I hope that continues to grow. I want everyone to win here. I don't want anyone to lose. That's my goal.
Gregory, what do you think about the market right now, approaching new highs almost on a weekly basis? I'm obviously I think there's going to be a pullback, but I am in the camp now that I kind of tend to think that Dow's going to hit 20,000 over the next 2 years because of all the inflation and the devaluation going on around the world in all the currencies. What are your thoughts on the Dow in the short term? Are you expecting a collapse?
Well, no, I think I'm with you now. I was. A couple of weeks ago, I was, honestly, probably about 3 to 4 weeks ago, I was all but certain that we were going to see a strong pullback, and it wasn't just me. We had the chief equity strategist, J.P. Morgan, coming out saying this. A lot of people coming out, analysts like myself, saying there's going to be a big pullback. But what happened, something very interesting happened. Over a 3-day period, we saw an incredible amount of buying by the institutions, buying back their own stock. And what it did was it pushed the markets back up. It didn't allow that correction to happen. And I think that scenario is going to repeat itself. They're not going to allow a steep pullback. There may be some pullbacks here and there, maybe 3, 4, 5% at one point, but you're right. This is going much higher, in my opinion, for the reasons you just outlined. And people need to ride that wave. Ride the wave, ride the Fed wave in many ways, but understand where this is all going. At one point, free market will once again do its job, and that is to determine fair market value. We do not have a free market anymore. It's been stolen away by the Federal Reserve and the other world central banks, but the day of reckoning is not far off.
Gregory, in closing, if somebody wants to reach out to you or purchase one of your books, where's the best place for them to go?
It's real simple. You can find me everywhere. Just at GregoryMannarino.com will take you to my YouTube channel where I post a free Business Day Market Report. I'm urging people to take advantage of my website, traderschoice.net. Anyone can friend me on Facebook. I will never turn down anyone that wants to friend me on Facebook. Shoot me an email, and that's it.
You're doing a great work. Thank you so much for your time.
I really appreciate it. Thank you.